Good morning, traders. Welcome to the Flow Show. I've got to start by saying you guys owe me. You know that? When I have to prep for this show, I have to go through all the ECB wafflers that have been out this morning, all 11 of them, before I have my first cup of tea, I tell you. The things we do for you guys and girls, I don't know. Morning, Kay. You've got the next 11 ECB speakers, by the way.
I'm only. Good morning, Ryan. Good morning, everybody. TGIF. I'm only going to count the subs of the football team. We have a full team now of ECB speakers for the Euro, and now the subs are going to come. But we haven't heard from the goalkeeper yet, Lagarde, after the. But she will probably be already on her weekend, right?
No, she's up later.
Oh, is she?
Yeah, she's on the docket.
Oh, right. Yeah. Okay. So the goalkeeper of the team is going to speak as well.
Yeah.
Okay. Well, yeah. Well, we knew that they were all going to talk. But the funny should have been Holtzman, but I tell you what, he was at the center this time. Now next month they will all be on hold, and he will come up and say like, "Oh, I've seen enough. I'm voting for a cut now."
Yeah, that was the worst kept sources secret yesterday. As soon as it came up, there was one dissenter. Everyone went, "That's Holtzman."
Exactly.
And
Exactly.
so it proved to be the guy. Yeah, and the necklace.
Oh yeah, the necklace was a classic. Wow.
I still don't know if that's real or someone's photoshopped that, but
Well, I mean, if you look at the live press conference, it did look very much like saying "in charge," right?
Yeah.
Must have been a present from the windows.
Yeah.
They were in Italy.
Exactly, and this has got to be. Well, I say this has got to be one of the first meetings where I haven't actually had to bother to write any headlines online because it really was a load of old waffle garbage.
Absolutely.
And so I just spent the afternoon taking the piss out of all of them, which is always more fun. Right, well, let's get into it. I'm going to make you lot go through all of the 11 speakers so far, and even her from yesterday. So if I have to suffer it, you guys and girls are going to suffer it as well. But we shall start in China, and a rate cut of sorts over there. There were some small Chinese banks cutting their deposit rates to lower funding costs, according to the Shanghai Security News. One bank lowered its 3-year fixed deposit rate from 3% to 2.6%. So quite significant cuts going on over there to try and stir things up. Over in Japan, Japanese Finance Minister Suzuki has been lamenting on intervention. He says FX intervention should only be used on a limited basis, as there's a need to smooth out excessive FX moves on occasion. They also need to think about the effectiveness of intervention, and they're not thinking of a fund limit for any intervention. Bloomberg was out with a little bit of a piece saying that Japan likely sold treasuries to fund all that intervention because their reserve holdings of foreign securities dropped by 50 billion, which, according to someone probably doing a 2 + 2 = 5, says it shows a willingness to sell US bonds provides Japan with the FX firepower. Any truth to that, Kay, or just someone just trying to make some headlines?
No, I think a bit of making the counts, doing the counts, and seeing the differences in the accounts. It is possible, you know, but is it that? Is it pulling on the swap lines? I'd say it's not that important yet. I mean, I think the article just wanted to make a point saying that there's still $1.2 trillion in reserves, so they will have ample reserves. They can sell their bonds if they want to. But I wouldn't read much more than that in the story. I'm not sure if it's that one that has been putting a bit under the yen, or more rather those persistent talks of them going to reduce the bond buying plans next week at BOJ. Because if you look at the Suzuki comments, they're actually one could interpret them as actually being a little bit weaker for the yen, because he said like it's going to be something on an exceptional basis. And we had already heard from Yellen as well, that she commented when she was coming to the G7, I think. She already said it should be an exceptional event to intervene. So yeah, for the rest, really, I'm not going to. I don't see a trade in there, at least. That's the main thing.
Yeah, and good morning, Dereg, and here's one for you. Just jumping back to China, because there was a headline this morning saying that China, and this is a Bloomberg piece, so the headline was structured to maybe it could be interpreted one way. The headline was anyway that China halts gold buying for its reserves after an 18-month spree, which some might think, oh, China's stopped buying gold, full stop. That's not the case. All that's happened, again, someone's plucked the numbers out and made a headline from it. All that's happened was that their gold reserves were unchanged up to the end of May versus the prior month of April. There's been no official headline, official announcement that they've stopped buying, not that they tend to give such direction on reserve buying, but again, that's hit the market. So the headline maybe not as inflammatory. It doesn't suggest yet that they've stopped buying entirely, but we've seen gold taking on a bit of an offer at the moment. When I first saw the headline myself, I thought about jumping in and selling it, but then I read the details. I was not convinced about that, and I was maybe thinking about a dip buy, but we're not really we're in the middle of nowhere at the moment. So if we'd have maybe hit one of the big levels down here, if it had been a big move, I might have thought about it. But until the market reads the details of that headline, it looks like gold's getting a bit of an offer in it at the moment, but that's why we got that move, if you weren't aware. Right, let's get over to the clown show. The ECB, they cut their rate as expected, or rates as expected, 25 basis points. They said in a statement, inflation is likely to stay above target well into next year. The forecasts raised inflation for 2024 and 2025. Lagarde says that wages are rising at an elevated pace, and forward-looking indicators, though, signal moderating wage growth. Wages is a big part of their makeup on their decision-making, and I'll highlight some news in a moment. She said inflation is going to fluctuate around the current levels for the rest of the year, and then it will decline towards target in the second half of 2025. So that's a bit of there's a reason why they can take a cautious approach, but also it doesn't really matter. If they're wrong on that, it means inflation comes back to target sooner and they can cut sooner, but that's giving them that optionality, shall we say. The cut today was justified by confidence in the path ahead. Then she went on to say, we're not going to tell you until much later in summer if we do something now or at another point in time. That was one of her head-scratching headlines or comments. Then she said, we can't confirm the dialing back process is underway, but there's a strong likelihood that we're dialing back. Today's decision was almost unanimous apart from one governor, which was Hawke Holtzman. One interesting comment is that someone asked her about Fed policy and the way they do things, and she said that the dot plot was an interesting concept, but we'll leave further comment there. So could we be getting a dot plot style thing from the ECB when they do their framework review and decide how they're going to move forward with giving information about monetary policy forward guidance? What did you make of all that, Kay?
Yeah,
I'm going to go. I'll put the kettle on while you're explaining.
don't go too far because there's not a lot of explaining to do. If you compare both Bank of Canada, ECB, change the size of the or the importance and the heap of cash that they handle, and it's the same meeting virtually. The cautious approach, the buying time, revising the inflation forecasts a little bit higher. By the way, they also revised growth just that little tad higher as well for the period to come. But that may be a bit of a hopium one as well, because in the meantime we have already seen a few German data not really supporting too much of it. But yeah, it's just a cautious meeting, and July is likely off the table now, and move on. We are data dependent, and that's where we are. And yeah, and if you look at most of what's been traded, yeah, the euro crosses did catch a bit of a bid selectively, but it didn't really last for very long either. So I think it's a ball back in the center, and now we are already looking at what's going to happen this afternoon, right? And since everybody is data dependent, it's going to be important what happens this afternoon, because it can direct a few of those central banks to come.
Yeah, we agree with that. And it's all been the same. I mean, there was the possibility of the euro moving. It didn't. Just the same as the loonie didn't over the BOC. The market knows what's coming, and now it's starting to get it. So there is little influence really for prices to move, and that should answer your question, Ali, about what if US data is strong. You know, I know you ask these questions a lot. What does the price tell you is going to happen? We've had countless NFPs, countless central banks. What has the price done? This is where you need to look at your charts and look at context for everything. Look at the different timelines, the different time frames. You know, if you look at something like a 4 hour, the longer, higher time frames, you're going to see consolidation in a lot of pairs, ranging. Obviously you're going to get short-term moves, short-term fluctuations if you look at your lower time frame charts. But if you want to answer the question, Ali, you don't need to ask us. Just look at your charts and know that it has to take something big, be it big to the upside or big to the downside, to really get the market moving. So, you know, we've been in this situation for months now. The question you're asking now is the same one we've been asking for months, and the answer at the moment has always been the same. What's going to cause a big trend? A big change. That's what will cause a big trend, pure and simple. So unless we get a big change in the fundamentals, be it from US, Europe, UK, whatever, you're not going to get a big trend happening or a big change in any trends at the moment. So your charts can be your fundamental answer, Ali. Right, moving on. So after all that, traders kept their estimates for ECB rate cuts and see 40 basis points more this year. Then we had the sources coming out with the ECB, as Kay mentioned, all but ruling out a July cut, but saying that the September decision remains unclear. Another piece said some ECB hawks argued that committing to the June rate cut too early was a mistake. So all that talk for the last few months that they were going to cut this month was a mistake. And a few hawks said that they might have supported holding rates if there had not been that commitment. So that does make it a little bit more of a hawkish cut than is to be expected, perhaps. Right, here we go. Floodgates time. I'm going to get through this in record. Yes. No one disappear. I'm watching the Zoom numbers. I can see there's 38 people here at the moment, and if I see that drop, then I know who you are. I'll come after you. ECB gazettes. Any further rate cuts should be gradual. Muller, ECB shouldn't rush to cut rates. Nagel, ECB policy not on autopilot when it comes to rate cuts. Decision to cut rates was not premature. Vasley, can't predetermine the path of ECB rates. Simkus, more than one cut this year is possible. Ren, inflation will continue to decline and interest rate cuts will also support economic the economic recovery. McLuth, ECB confident the disinflation process is working. Don't know how fast the ECB will carry on, if at all. Schnabel, future inflation outlook remains uncertain. Hawke Holtzman, he wanted to send a signal with his rate vote dissent. He dissented on a rate cut because of the data, saying the CPI risks outweighed the growth risk. And he said that the market interpreted yesterday as a hawkish cut. All done. Right, anyway, I was speaking about the data. One piece of news, I don't know if it's on this calendar, that came in with the Eurozone final GDP number. No, it's not. Was the Q1 compensation per employee number, i.e. wages, benefits, pay number. It rose for Q1 to 5.1% from 4.6% previously. So a big jump up in those wages, as Lagarde mentioned. So they'll be keeping an eye on that, and that's something that will keep them probably sitting on their hands for a while longer in terms of another cut. Germany has been waiting for this cut to come, and the German economy minister was happy that he got one, and he said if things go well, we will have growth of 1 to 1.5% next year. Woo! Huge numbers. Good luck on that front. Right, moving away from the ECB very quickly because I've had enough of them. Yesterday we had some data out, jobs data. We had Challenger jobs, as you can see there. Another bit of a lumpy number, was lower than last month, but still quite lumpy, near that 64k mark. That's picking up. Now, the comments from the report said that hiring has slowed to its slowest since 2014. So there's, again, some little yellow flags being waved in the jobs market. Not that you'd know it via the initial jobless claims, which are still going sideways around the 200k mark, 230k mark. Came in at 229. Continuing claims came in still at 1.792 million. So no flags from that number still at the moment. As you can see there, we also got some Q1 data from the US. Unit labour cost 4%, so lower than expected for the quarter, but still a big jump over the end of 2023. Right, into some political news and other bits. We heard another blip for the Mexican peso. Let's get the chart up. This was a nice surprise last night. There was a story dropped that the ruling party is gonna, or it has vowed to pass some hefty reforms, and that these reforms potentially going to reduce oversight and control over the government. So that, the people aren't going to have the oversight and control over what the government does. So that's not good news for investors. The Mexican ruling party lower house coordinator said that they will be talking about these reforms when the president vote is finalised. So that gave investors another bit of a spook last night. Price-wise, we've had these spikes up to 18. We've had these spikes over 18, which have been very reactionary price moves. This one is looking a little bit different. We're finding this a bit of a tough nut, even on that headline. Okay, but it just shows that the market is still uncertain what's going to come from this. This 18 level, I think, is becoming very, very important. If we get a break above it, and it's not just a spike move, it's a bit more of a gradual move, that's going to suggest that we're going to be going higher. And it's likely, if we do see a proper break there, if it starts to hold afterwards, it's going to become a really decent support level. So this move feels a bit different. It's a secondary bit of information. We said we're going to need to see what happens next. At the moment, investors are still not looking too happy about the situation, but we'll see what happens. I don't think it's too much of a call to say this one is definitely a dip buy at the moment, Kay. And also that 1740 level. That 1740 level has proved really important.
Yeah, you're absolutely right. First of all, about the levels, and secondly, about the direction. What they are planning is probably going to be maybe not all anti-investor, but it's going to be spending money on Pemex again. It's going to be perhaps taking away some concessions for foreign drilling and stuff. There's risk also, as I've been talking about, is going to accumulate now in the second half of the year as well with the US elections. And it's not a pretty picture, you know, if they push forward with some of the trying to get control again over more of their drilling and things, and even you know there's a lot of manufacturers now in Mexico having moved away from China. If they start to tax them and things, that's not going to be a very pretty picture. And to come back on the price action, I think today the 18 cap has perhaps more to do with the immediate advent of the US jobs report, right? If you think about, oh, okay, it may be may be the month where the US job market starts to soften. I'm not saying falter, but soften. You don't want to keep dollars. So I think what is happening right now is that people are perhaps pushing a bit of that dollar mix into other dollar pairs, and because the crosses are holding up pretty well, right? So that I think is your 18 today. Get a beat of that US report. I think 18 will be toast, and we're going to see 18 and a half pretty quickly. But yeah, the outlook is really not great, and I kind of hate myself for not having taken this move, because before the elections, I was the one who said, like, if they get the absolute majority, it's not going to be liked by investors, and we had it. And unfortunately, I was a bit I don't know what, too lazy to or too cautious to get heavy into it. But I think yeah, MEX, at least for now, is a sell-on rally. I'm not saying we can't see any rallies, because there's this kind of thing as well, that Lopez Obrador is not a completely stupid guy. He's a while ago, he warned also when the mix was getting a bit too strong. He warned a little bit against it, and it put in a bit of a bottom in all things Mexican peso. And I wouldn't be surprised that he's looking at the currency. And if you lose another 4 or 5% coming on there and saying, like, well, it's only going to be a soft reform program, just to counter it a bit, right? So we can't completely close your eyes and be short mix. That's what I'm saying. It is a big move, and I completely agree that Mexican peso is for the time being a sell on rallies, and but we need to keep an eye on what the comments are, because they are the driver, right? As yesterday has shown, it was relatively stable, although bit dollar mix. But it's really the comments that put the cat amongst the pigeons again, and drove it back up to 18, right?
Yeah, very much so, mate. And I know we've been talking a lot about how it's there's a distinction between people like investors and country watchers and that sort of thing, and carry traders. But you can't rule out that if there is a bit of weakness coming to the mix, if we start busting some of these big levels, that you're not going to get the carry traders capitulating as well, which will add further to these moves. So it can, if we start getting above these big levels, then it's going to trigger some of these carry traders to exit, just because now the FX thing is not going their way. And as I say, you can add to the move, so you can see a sort of secondary tailwind coming in, and then that pushes it even higher. And then once everyone's done that, that's when you start to get tops in play. But we shall wait and see. The levels are going to be my guide. We've got to get above 18. If we get above 18, 1850 is the next huge level, and we see what we want to do there. Right, moving on. just a small headline. The majority of people watching and analysing the Bank of Japan expect a cut in their bond buying next week. So that's probably about all we've got to look forward to from that meeting. And the calendar's being spun by ANZ, who now see the first RBNZ rate cut coming in February. They pulled that forward from May. That's it. Look at that. Got through all the headlines, got through all the ECB speakers. NSK's got anything to drop on us?
Yeah, one additional one is that this weekend we are having the European Parliament elections.
No more elections.
Yes, sir. It is usually a absolute non-event. Okay, usually it's an absolute non-event. But with all the geopolitics at play right now, and with the latest far-right push that we have seen over the course of the past years in Europe, there may be some sort of perhaps a little bit of a risk coming after the yes, you said it, Marcus, another clown show after the weekend. So it's not to be completely dismissed, okay? And I'm not going to probably trade much of it, but I'm just going to keep an eye on it just for geopolitics' sake. And the other one that we still need to keep an eye on is the South African election government talks. For the time being, it is looking like it's an anyone but Zuma kind of discussion ongoing. And we are seemingly heading for an ANC DA, possibly IFP in the mix government, which would be the least worrisome probably for investors. We have seen the dollar rand weaken on ANC losing its majority, but stalling around 19 and coming back a little bit, perhaps also ahead of the NFP. But keep an eye on how those talks evolve. I still think that any relief coming from a coalition, ANC, DA, and another smaller party, barring MK or EFF, may see a few investors or may see a few in the market say like, okay, this is relatively positive and the rand will strengthen a bit, but I really doubt that they can make strong on their pre-election promises that they are going to solve all South Africa's problems. So I'm going to view any outcome of those talks, if they would be positive, and you see a couple of days, a few sessions, even perhaps a week long, the rand benefiting from it. I'm going to see this as an opportunity to start counter trading this again. And that's me done. Ryan has disappeared.
I'm here. Yeah,
I guess
I'm just getting the Euro Sterling chart ready because Ali's asking about the Euro Sterling chart. So yeah, here's our Euro Sterling analysis for today, Ali. That's your chart. We'll come back to this one on Monday. There you go. But nothing happening in Euro Sterling, which is a little bit worrying because, you know, if I was thinking that the euro might see a bit of a bid after the ECB, but we tapped 109 and then just fell back into the tight range. And what have we got at the moment? We've got a 15 pip range today for euro dollar, euro sterling. We've even got a smaller range of that. Oh, we got a 11 pip range for that one. So yeah, the fact that we haven't pushed off suggests, you know, maybe the market is looking for a bit of a break. You know, I'm not expecting it to rally all the way back to 87 quickly, but I would have liked to have seen a bit more of a stronger reaction in this one. So it looks like we're going to be in for a lot of wait and see down here at these low levels, but we're still holding it. So for someone who's long like me, that's a small win at the moment. I've brought my stops back up and I will be looking to do a reverse this time if we do break it, because there's still that risk. What are your thoughts, Kay?
I had actually a question for you. When do you think that the market may start to trade the UK elections, if they will trade it at all? But when do you think that this may start to happen?
Probably
the week before.
No, if it's going to at all, maybe the week before. Maybe once we start getting the real floods of polls, which are probably all going to be the same way. If there's any sort of upset, and I think the upset will come with the Reform Party, who have stepped into the mix with Nigel Farage becoming leader. Bit of a shock
the
move.
milkshake man, yeah.
So yeah, that's shaken the tree a little bit, because that can make it a three-way thing. That probably increases the risk of a hung parliament, because we may get some people who would have voted for Labour voting for Reform, or vice versa with the Conservatives. So if the Reform Party, have a shock and they become the second largest party, beating the Conservatives, that might get the market a little worried. But it's still going to come down to how Labour perform. If they don't get a clear majority, and if polls and things like that closer to election picture things that they're not going to get a clear majority, that's when we probably get some movement in the quid. But otherwise, as happens every time when Labour have a chance of getting in, they water down their extremist policies. They become almost conservative light, and the market goes, well, that's going to be business as usual. So, yeah. All the campaigns coming out, so we just look for what they're going to be doing with tax and stuff. But yeah, probably a couple of weeks before the actual election.
Okay, and just to reply to Ali, I mean, it's not the Bank of England which is going to be important for that one, really. We are all, of course, still data dependent, but we are talking about some kind of the possibility. I'm not saying it's there, but sorry, we are traders and we have to look at all possibilities. The possibility of things starting to move in the sterling due to the elections, and when a political landscape changes, your central bank can only do as much. Even cutting or hiking rates, if it's a big change with big changes in programs to be understood. Okay, I mean, if you look at the early programs, there's actually they're both Labour and the Tories more leaning towards centrist government than extreme left or right government. So it may not make a huge change, and that's why we see the sterling being very, very stable, especially versus its main trade counterpart, the euro. And I think euro sterling, and we've been talking about this euro sterling often. Euro sterling is going to be a very good barometer of what is going to happen to the sterling, because you do cable, there's a big dollar part in it, right? You do sterling yen, there's your yen part in it, which is volatile, and et cetera, et cetera, et cetera. So I mean, the euro sterling is probably going to be your judge for confidence or no confidence in what's happening in the UK. Would you agree on that, Ryan?
Yeah, absolutely, mate.
Yeah,
absolutely.
This is really going to be your judge to say, okay, for a lasting move, I mean, this is your confidence vote or no confidence vote. It's going to be the euro sterling, and sterling and cable and the rest of the sterling pairs will depend on it. So that is really what is going to be important, and that's why it's also important to know when it is starting to have an impact, and when we will start to move it. Is it a blip? Is it just one poll coming out? Is it but one day or another, this thing is going to start to move. And if it's on politics, as we have seen, we just had like some really great examples in South Africa and Mexico, even though they are emerging market currencies and they move a lot faster. But we have seen the proof that politics can move a currency faster and deeper than central bank policy can do at times. Okay, so just wanted to highlight that.
And Devesh has made a point. I'm just going to make that same point. Devesh says, I think both parties will be careful on their fiscal policies. That that will actually be the time where the pound will move most. When, let's say, for example, Labour get a majority, they will be announcing their spending plans, their budgets. Are taxes going to be hiked up? Are taxes going to be cut? Are they going to borrow huge amounts of money where we know interest rates are high? All that sort of thing. That's going to be the bigger move, because you saw what happened with the Liz Truss stuff after the IMF slammed her plans, even though most of those moves were caused by what happened in the pension sector. But that's when you'll probably get the bigger pound move, when investors will go, do I want to keep my money in the UK? Is it going to grow? Is my investments at risk of being taxed to the hill? That's when we get probably the bigger pound move after whoever's won the election. So yeah, we're all waiting for their manifestos. I cannot tell you, and I listened to that leaders debate earlier this week, I cannot tell you what their policy plans are. All I hear is we're going to do this, but no explanation of how exactly they're going to do it. And as we know from elections, they find money down the back of the sofa and under the carpet and in the ashtray in the car. They always find loads of money. And then when they get in power, they've really got to find where that money comes from. Anyway, moving on from that one, nothing to talk about in euro sterling at the moment. We looked at gold quickly, looked at dollar mex. Kay, I'm going to pass it over to you, mate.
All right. Okay. Thank you. So we're going to look at what could happen on today's NFP and Canadian data, right? Because we do have a double whammy here today with the US jobs and the Canadian jobs report. So first of all, euro dollar after yesterday's ECB, very, very small ranges still that we have to contend with. It's all going to be, I think, about whether the 109 is going to be your first barometer, but it's very, very close. Whether we can get through, first of all, this 109.3540 zone here, and then whether we can get up to or close to 110, right? So that's going to be your stuff in case of a weak report. And I'm just going to remind you that the commentators and people who are supposedly keeping the accounts are saying that May is potentially the first month that we are going to see deeper weakness in the US jobs report. Now, the thing is that the market already started to trade this, because we are relatively close on break levels, whether it is in the euro dollar, whether it is in cable. If you look at stuff like the Kiwi, for instance, we're very close there too. We are trading on sensitive levels in dollar Swiss as well, for example. So the market has already been preparing for that. So I'm going to say here it's going to be a binary affair, because if we do get a weaker report, the bears are really going to stick their teeth into that and send the dollar lower today. Okay. Now the opposite to me is equally true. If we get a report that defies the laws of gravity, and we get a let's say an NFP number well above the 200K with a good decent participation rate, with the hourly earnings staying sticky around 4% on the year-on-year, with a good repartition between privates and government, there may be a round of forced dollar buying to come as well. Okay, and then you are going to look at pairs like, for instance, the dollar yen, or maybe even the dollar Swiss. Then you're going to see a reversal in the major pairs as well. But I think we can't dismiss the possibility of it. Okay, just because the market is now expecting that we are going to see a gradual weaker job market, which has been somewhere supported by yesterday's report as well. But we had earlier reports in other data points where it suggested that we may still see a bit of weakness. Now, so this is your euro dollar. Don't forget, but unfortunately, The FX option market is still very relaxed, so they are looking at an expected range in the euro dollar of about 108.4050 to 109.4050, which should be, if that is correct, we will find sellers on the top, buyers on the bottom, and unfortunately we will close the week now. And there's one that I'm keeping a very close eye on, and it's this cable here, because I think on any soft weakness, we know that sterling is a bit of a risk currency as well. And if you see positive risk in the market, like let's say, for instance, if the stock market would continue to rally on a very soft, weaker number, and I'm talking like the non-farm payrolls, 180 expected, the whisper number is somewhere in the 160s. People are thinking that we may come closer to that 160 level. That's what the major banks are. I think JP and Citi are expecting a number in the 160s. That would be like a soft number and probably very good for your equity markets again as well. And I think that this one could go for a walk. Therefore, we need to close. Well, not need to close. We need to break. Sorry, above 128, figure 20, figure a quarter. If that goes, I think we will be very quickly around 129. So this is one of the currency pairs that I'm looking at to trade over the NFP. Okay, in case of a weak NFP. All right, because I always look at currency pairs which should be doing the best in case of a weak number, and in case, on the other hand, in case of a strong number. Now, this one, dollar yen, is going to be extremely binary, I think, because we sort of already know that, or it's really highly expected that next week the Bank of Japan will reduce its bond buying. So that is part of this move here, together with a bit of a weaker dollar, the rejections that we had up in the 157s, then in the 156s, around the top end of the daily cloud. But this is going to be interesting because we're turning around this 23.6 as we go into the data, okay? But since it's been sold off again already, I think if you get a real good data point, we could be very quickly back into the 156s, and why not even retest this one? So this is one that I'm going to keep an eye on in case of a strong report. Okay, and I mean a strong report is going to be, first of all, weighing a little bit on the equity markets, but then if you say strong job market, I think the equity market is going to rebound, and that's going to potentially give a bit of a double push into a double push against the Japanese yen. All right. If you get a weak report, I think we could easily see this thing into the 153s somewhere. So this is going to be a binary one, but one to keep an eye on, I reckon, in case the report is strong. Now another one, and I'm just having like a very tiny position right now because I don't want to run into something of a very strong report. But the other one that I think is ready for a break higher, if we get a weaker, mildly weak report, okay, mildly weak report. Because if we get a very bad report, then I think you should be doing stuff like euro dollar, probably dollar yen, and potentially that cable. But we know that the antipodians like mildly weaker stuff, so it's good for risk. Okay, so this one I think could go push higher in case we get a mildly weaker report as well. Okay, this is one that I'm looking for, and I think this one could go euro Aussie dollar. Sorry, and I've been told that I have to show the rate where we are right now. Hang on a minute. Hang on just a slight bit. Okay. Yeah. So, but so this Aussie dollar is trying, but I would say that this could be a bit more vulnerable in case of a stronger US jobs report, because it hasn't been as perky as the Kiwi of late, and we are still in a bit of this descending larger channel, right? So if we get a rejection here of those high 66s, there is this possibility in case of a stronger job report that the Aussie suffers a bit more than the Kiwi, for instance. Okay, so I think there is a difference these days between the Aussie and the Kiwi. Dollar Swiss, Joao. Yeah, difficult one. Difficult one today. I think it's a difficult one today because we are on sensitive level here. This one I think has also a bit of a binary potential. Get a bad report. I fear that we will be looking at stuff into the 87s. This is going to need a pretty decent report to start rebounding. Okay. The rebound is going to be measured whether we can get to and above 89.5 for a starter. Okay, but I think this is going to be very, very, very important on a daily close here, because we are also turning around the 200-day moving average. All right, so yeah, this one I don't have anything in it right now. I'm tiny bit long Euro Swiss just to play off that 96.70 level, but in dollar Swiss I don't have anything right now because we are on this level and it has the potential to do 100 points, 140 points lower, as well as rebounding here. And for dollar Swiss to start moving higher again, it's going to have to break back above 90. So that is going to be your break zone. If we go back above 90, then we are going back up, I think. And that will then, in my opinion, coincide with the fact of a market being forced to buy dollars higher for longer. And if you look at the top end here, we are trading around 430 in the 10 years. Imagine that the jobs report is strong enough to take this back up through 440, then it's going to be a rush into the dollar. So we need to take every possibility into account right now. Quick look. We've had that gold move here. I think it's still a case of the 23.15.25 from where we bounced here. Keep an eye on where we are going to close the week here. And have I forgotten anything? I don't think so. Dollar rand here, you're 19. I know it's overshot there a little bit. This is one, if we get a strong report, perhaps this is going to bust the 19 level and take us up into the 1920s, because people will likely have to buy a few dollars again. Ryan, back over to you, mate.
Thank you very much, mate. Thanks for all
I was
that.
asking about the S&P.
The S&P, yeah, do you want to take that one? Yeah.
Yeah, 53, 75, 80, Joao. If we get a mild weekend report with a bit slower or lower yields, it's probably going to bust. If you get a big miss, like really catastrophic number, the algos are going to buy it because the yields are going to drop sharply. But I would counter any move up, because a very bad job report cannot be good over time for stocks. That is, if they buy stocks lastingly on the back of a catastrophic jobs report, then you just tear up all the economic books that you have ever read in your life, and you join the roaring kitty crew. A report, a quite strong report. A quite strong report will probably see a bit of a setback and then stabilize, because good reports are usually it's an employment report, so good report is usually not too bad for the equity markets either. But perhaps your Dow is going to do better than stuff like the S&P if we get a good report. And with that, I'm done. Ryan, over to you, mate.
Yeah, thank you very much, mate. And just a quick note back on euro sterling. It can be affected by this data today if there's a big move in the dollar, because the euro and cable move at different speeds. Euro dollar and cable move at different speeds. So cable is a bit more volatile, tends to move a bit more. So if it's a really good number for the US, then cable might dip more than the euro dollar, which means that euro sterling should go up and vice versa. So just bear that in mind too, all of you lot trading euro sterling. Right, that's it for this week. some of you will see you in the chat room later on or in a moment. Thank you, Kay, for all your wonderful stuff this week, and thank you everyone for coming to the Flow Show this week and supporting us here. Have a great weekend, everybody, and trade safe later.
Thank you, Ryan. Thank you, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.